3, 2, 1.
Here we go!
Welcome into the open where we get technical. You should have investments in long-term growth.
Welcome to Get Technical. A little bit of a late start today. I'm a bit under the weather, but it's not my fault. It's Spencer Israel being a chatty Cathy. Is my frame rate super low? I feel like we're using like AOL Instant Messenger video chat. Are you guys seeing the same thing? This is like when Basil calls Austin Powers at the end of the first Austin Powers movie. We missed the bell. Ding, 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 ding. Diseased again. Yeah, I have the affliction, guys. I don't know what's wrong. I'm gonna take a little swig of the old Dayquil, and we're gonna get into some charts. One thing I want to talk about today is, dude, I don't know what's going on with this camera stitch. Hold on. All right, you know what? Just deal with it for a second. You guys are all adults. You can take it. There's one quote. Whew, that's the good stuff. There's one quote from Warren Buffett that I always forget to lay on people. A little choppy. How's the audio? Oh, God, stop moving. I'm going to throw up. Generic orange cold medicine. Dayquil, Vicks, if you want to sponsor us, we're open. So there's one quote that I always think of when everyone is up on the meme stocks, the FOMO stocks, and I want to touch on it today. It's a Warren Buffett quote, and I want to make sure I don't get it wrong. There are a lot of good ones, such as only invest in names you know, right? Companies that you understand. If you eat a lot of oatmeal, invest in oatmeal stocks. Don't invest in metal refining. If that's not your space, but if your family has worked in the metal industry or the mining industry and you understand that, you might be a good person to invest in that sort of asset. Another good one from Warren Buffett: investing isn't rocket science, but there's no easy button. That's a good one, right? Okay, where is this darn quote? Because I actually forgot it. Ah, here it is. This is my fave. All right, text, adding text to screen. By the way, I'm just bragging. Hold on, let me get United States Steel looking healthy today. It's getting that impulsive move that Miles wanted. So United States Steel looking like a buy to me, in my humble opinion, ticker X. Let me just get over to Hubs really quick. A little bit of bragging, I think, is in order. Oh, you guys can't see it. I'm such a fool. There it is. There it is. All right. First, let me get back to X. Now I'm going to hit you with a Warren Buffett quote. X is doing its thing. All right. X is looking good. Shout out Miles for sticking on this trade. United States Steel. And this leads into the quote that I'm about to get to. This was a nice reversal that we got. We got our reversal here. Let's get into Hubs. Earnings are Thursday for X. Thanks for the heads up, Toddy. I'm going to put that on the screen for everyone that's in that trade. HubSpot. Remember I mentioned a little couple handle? Looking good so far. Today's a little bit slow, though. I do wonder what is going on more broadly speaking. But I really like this cup with handle. I really like the stock in general. This is a stock that I know because I use HubSpot every day for work. But this is the one that I want to bring in to the arena here. Let's look at Orgo really quick. We haven't quite broken out of Orgo. Yeah, maybe we have a little bit. We're keeping an eye on Orgo, but we want to see a break above this pivot point. Let's look at NMM. NMM, my friend. All right. The quote is, I keep trying to use Photoshop shortcuts on this. The best moves are usually boring. If you waited around all day in your entire trading career waiting for explosive 50 to 70% moves, how quickly do you think your portfolio would actually grow? What are your odds of success there? Give me a 1 if you think that that's a reliable strategy for growing wealth. Waiting for explosive moves on things like chat room pumps, insider news, or even short squeezes. How successful of a long-term strategy is that? Give me a 1 if you think that's good. Give me a 2 if it's not. I really like this answer. I'd rather compound 5% every day. If you're compounding 5% on your portfolio every single day, you're going to become a millionaire for sure. All right? You're not going to wait for some nonsense. The best moves are usually boring. Here's the next thing I'm going to add to that. A little more context from the Buffett. We make no attempt to pick the few winners that will emerge from an ocean of unproven enterprises. That's your penny stocks. All right? We're not smart enough to do it, and we know it. Invest in stocks that have strength and pile in. And occasionally, a good short squeeze is a great thing. I agree, Joe. I love me a good short squeeze too. But that is not the majority of my portfolio. In fact, the majority of my portfolio is boring stuff, so that I can look at it in the morning, wake up, sip a Sudafed. If I had a big night, maybe a couple puffs of the old fast-acting asthma inhaler, and I like to see that portfolio green, baby, because my boring stocks are working for me. All right, so that's enough pontification. God, look at NMM, the shipping stock. I love it. I love this shipping stock. I love it. I love it. I love it. So we are getting out of this cup with handle pattern. We've broken above our resistance, which was also a pivot point here. And now from the breakout on our cup with handle, which we'll go ahead and just use this candle for. So far, that's 7.89%. What's our target? Depth of the cup added to the neckline. Pink line up here. Our target is 37.89. NMM, boring stock. Where's boring is Common? Speaking of Common, I'm gonna get some tunes going. Where do you, tell me, have you seen anyone talking about this stock? Let me know. Give me a 1 in chat if you've seen other people talking about NMM. Give me a 2 if it's pretty much nowhere else. And Remy, I'll look at RFP for sure. Nice, you made some money on it. Way to go, Hertz. Nothing wrong with taking profits. All right, so let's take another look at NMM, because this is a let it run and pile in kind of thing. We're easing into this and watching key points where it might take a breather. So the first thing I'm going to do is pull up my Bollinger Band. I think that's the first thing you got to have. That and RSI. So let's pull up the Bollinger Band. Number 1, according to the Bollinger Band, this thing is getting extended. Might be time for a little corrective phase, meaning that there's some selling action that you need to watch. Set your stop loss super tight so you don't lose any of your profit, and watch that phase for another entry. And then let's bring up our RSI. This stock looks like it actually really gets into the 79 territory, 80 territory before it starts to whip back. All right. Before it really starts to get overbought. So according to RSI, we're looking good. According to we're well above our 20-day moving average. We're in a good spot. We're just keeping the stops stupid tight. In fact, a new thing that I'm trying is 2 to 3% trailing stop losses because I can't pay attention all day. But if I get an alert that it sells, then I'll look and see if maybe this is an entry or if this is a time to take my hands off for a while. My name's Neil, not Benzinga. I can't take full credit. So I think let this baby run. Let it run. But if you took profit, no one ever kicked themselves for taking profit. Ain't nothing wrong with that. All right, let's look at. I want to look at Apple really quick. AAPL. Let's look at our laggard here, according in the world of tech. So we know that MSFT. If I look at it, Microsoft. Got some freezage here. Am I still glitchy? Is my frame rate still really low? Producer AB?
Yeah, it's still a little low. I'm not sure what's going on with that, but we're trying to troubleshoot.
Okay, so here's what I'm gonna say. I'm gonna leave. Open up Apple on Benzinga Pro. Do your analysis on it, and I'm gonna restart.
Okay, give me 1 second to get Benzinga Pro pulled up on the.
All right, while he's doing that, let's reload this page. We're gonna see if we got any V's. Got any Donkey Kongs? It's better. It still looks funky. Someone said they were gonna throw up. We can't have that. I was trying to look at Microsoft. Oh my god, there's a glitch in the matrix. Apple's crack team of engineers hack TradingView so I can't look at their competitor, Microsoft. Apple works perfectly, but Microsoft doesn't. Huh. Must be something going on with the data provider there. At any rate, oh, here we go. Okay, you're up, producer AB.
Yep, I got my chart pulled up now. Why does mine doesn't look as good as yours did though?
Because all of your text and stuff is smaller, so it looks a little glitchy. Just full screen it, and for some reason it's really like horizontally oriented. I don't know what's up with that, but hey, I'll be back in a second.
All right. So basically, what I'm looking at here, I like anytime a stock is kind of hanging out in the same area, some consolidation. So all the way back since the last September, we've seen Apple at around this 130 mark. And to me, it's just saying it's begging to break out, right? Because we've been hanging out in the same range from about 130 down here to 108 at its low in September. And even when tech started getting crushed about a month ago or so, or a couple months ago, it still hung out around this like 120. So it didn't break any of these resistance lines. So to me, as obviously Apple has earnings coming up, I believe this Wednesday, but it will be dependent on those earnings. But I'm looking for something to break out because we've seen this consolidation for just too long, right? Neil, he popped back in for a sec. I don't know if he liked it, and it might maybe it's something with the camera settings. We'll have to get that figured out.
Keep going.
But yeah, I was just saying basically, Neil, I like anytime a stock kind of has some consolidation like this and it hangs out in a range, because to me it doesn't show, and if it hasn't broken through on the downside, it hasn't fallen beneath any of these previous resistance levels. So like I said, it's dependent on earnings, and it's kind of typical with Apple that sometimes we'll see the stock will run up before earnings because everyone's like expecting great earnings. and then they'll just report okay earnings, and the stock will go down a little bit after the earnings. That happens a lot. It also happens that Apple will just crush earnings, and the stock will go up 5% after. So who's to say? I like this stock long term, but I can't say one way or another whether I can tell if it's going to pop after the earnings.
Good take. I'm going to share my screen now. Yeah, last time it took a dump after the earnings.
And that was on good earnings too.
Yeah, record-breaking earnings. So Remy says coin flip. I agree. It's a coin flip. But looking just at the pattern here, guys. Let's look just at the pattern. We've got support here at about 131. And you can take that down a little bit to look at the wicks, but you can see the bodies are trying to stay right at this Fibonacci level. Can you guys see that line? Yeah, it's that blue line. So that's at about 131 and 3/4, right? Well, no, about 131, 132. But then you can take that down a little bit lower for a secondary level of support, which is where this body, if I zoom right in on this darn thing, you can see the body on looks like the 12th of April is pretty much right at where the wicks got down. But our Fibonacci line is right here. It is respecting it, as well as this pivot point. It seems to be respecting this pivot point and then breaking out a bit above to our the line that where we anchored our Fibonacci. So I'm looking for a breakout above this pivot, because look at how these bodies have respected this. If we get a solid green candle on this, I'm looking for a flag. All right, I'm not going to look at this. So you can get more detailed and see. You guys can probably see this in the price action that it's something like this. Here, let me see if I can drag this over. See how it's kind of like doing that thing? That's all great. But really, what I'm looking for is something like this. Let me hide those pivots, see if you can see that more clearly. A little more conservative there. So we have one swing high, one swing low. It might take some more consolidation. After the earnings, might take a dump, but I think your support should hold. In my opinion, because I want to see a resolution of this full thing that we got here. I have it on good authority that a breakout could easily have us targeting 155 with Apple. Of course, we're going to hit resistance at the all-time high, but treating this like a flag, if we get that solid breakout, which we would like to see a couple swings in here, no doubt. Let's get on the 4 hour and see if we get some more detail there. Not tremendous, but looking at this like a flag, measuring our pull down to the right side, or the right pivot of our sort of double bottom pattern that we have here, and then adding that, whoops, excuse me, and then adding that depth as height to our resistance line that we'd like to break through, which as you should see is prior resistance before we started this really big downward trend. There's a big target here. So I really like Apple. We shall see what happens with earnings. But you know, I'm gonna come on the show and not have known whether earnings happened or not, because I'm not watching for that kind of thing. I'll let the price tell me what's going on. So we shall see. But I think Apple's good. I like that it's a laggard compared to Microsoft. Now let's try. Everyone cross your fingers for Microsoft working. Hey, what's up, Miles? We just looked at X. Hey, Microsoft worked. So you can see how the two usually very similar. But Apple in this case was a total laggard compared to it. Oh my God, look at all that stuff on the chart. At any rate, I like the flag on Apple. But while we're here on Microsoft, let's go ahead and take a look at that. And then you guys can start dropping tickers in. Producer AB, do we have a guest today? I'll look at subs in a second.
Yes, our good friend from Skies Forex, or Second Skies Forex, Chris Capri, is joining us.
Hell yeah. Okay. I should have known. So looking at this thing, let's get our Bollinger Bands out. Still room to go on the Bollinger Bands. RSI going down. Not overbought. Not overbought. However, it doesn't get terribly overbought before it usually goes down a little bit. So I would not be surprised to see a little bit of downward action here, which we're getting today. Nonetheless, let's do this thing right. Let's use this number one. Let's turn on these pivots. See if it's respecting traditional pivots or if it's respecting these Fibonacci's. Looks like traditional is the way to go here. Yeah, I like where it's at. It looks like it could easily get up to 269, and that would be the point where you want to maybe take some profit. Okay, so let's look at let's get what was the streaming ETF? Subs. Subs is the streaming, right? Either that or it's the sub sandwich ETF. Roundhill streaming services technology ETF on the daily chart. This thing is in a clear downward trend. The question is, are we reversing? It looks like we may be. Let's draw our lines. We did cross above the 20 day. So right there, buy signal. Like, let me turn everything off. Just looking at the Bollinger Band, and you got your 20-day here. The fact that we've crossed above that, buy signal. But let's see just how much confidence we should have going into this. Let's draw a line here, which might be tough to do. Might honestly be tough to do. So we've got our absolute low. First, we'll do one of these. As low as she goes. Yeah, this one's a little bit tough to draw on. A clear trend line. Let's start from the absolute high, and then we can go to this. I'm using this swing high as my second anchor. So a couple ways to look at this. Number one is a cross above the 20-day makes it very easy to target the sloping line of resistance that we have here. But a cross above the sloping line of resistance is a very nice confirmation of reversal, but that will have happened after a significant portion of the reversal happened, right? Like you're not timing the absolute bottom. The absolute bottom happened here. But this is like a pile-in point, is what I talk about. It's the Warren Buffett thing that we started the show with, right? The best trades are boring. You're going to let it run. It's not going to be one explosive all in. You're on the golf course telling your buddies how much money you made on this one obscure penny stock. And we're in a good position. I mean, you saw right here at this pivot that we got right to about 30 on the oversold, which was enough for streaming, was enough for subs. Not much more really that I'm going to pull from those indicators. The only other thing that I'm going to do is delete all of my drawings so far. Really quick, just pull up a pivot. See how that looks. It's Fibonacci. Yeah, it seems to obey that. I want to see what the bottom obeyed. Nope, not that. Yeah. So I think with this one, you're going to get right to resistance. And if it does a lot of movement in one day, which it looks like it's not doing, but according to Dan Green, if you get a lot of movement, you do a lot of work, and then you hit one of these pivot points, you should sell or go short, because you're probably going to get the bounce. The more work you have to do to get to a pivot point, the more likely the bounce is, and probably the greater the magnitude. Nonetheless, this one's looking like we got a clear buy signal. But I would draw a line, anchor it at the all-time high, anchor the second one on March 22nd, the second part of your line, and just draw it all the way down and look at that and say, this is going to be a true trend reversal once we've totally gotten out of that. And then, of course, if you're looking at it as an investment, looking for higher highs, higher lows, baby. But as a trader, if you caught this at the bottom, I think you had a lot of indicators that this was a reversal. So good for you on subs. All right, so this is subs, SUBZ. You guys can all see, right? Oh yeah, maybe you can't see the top very well. Oh, my watermark is gone. That's why. Really quick, I'll add that. I think I can do that quickly. Appearance, watermark, boom. So now you can see that in the background easily, and you can see what time frame I'm looking at, which is 1 day. Okay, so let's look at Neo, because this person asked politely in Spanish. We'll look at Neo on the weekly.
Again, I mean, this is not too dissimilar from not too dissimilar from what we just saw with subs. I'll look at it on the weekly in a second. But I mean, you got that reversal at the bottom, baby. And we broke past the pivot point. So let's look at it on the weekly. Neo, I'm going to turn off my Bollinger Band. I'm going to get rid of this line. I mean, this looks good, my friend. This looks very good, my friend. This line of support broken through, not relevant at this point in time. Let's go ahead and go to our all-time high than the previous beginning of that impulse. So let's get our Fibonacci. We anchor it at the top here, and then let's go to the beginning of our impulse, which I'll say is actually a bit lower. Let's go low. Let's see what we get. One thing to take note of is that you're going to want to watch your RSI here. We were on a downward trend. We want to see that sort of round back up so we get some momentum behind the trade, because right at this level, looks like about 41. Let's see if we can get this to line up with the actual levels of support and resistance using the Fibonacci here. So at this level, that is like, maybe we do the absolute low of this rounding bottom. Nice little rounding bottom, huh, guys? Okay, that works a lot better. So I anchored the second point, or the 0 point, on my Fibonacci retracement tool to the lowest point on this rounded sort of saucer or rounding bottom, which I'll illustrate really quick. Pivot. Nice, right? So you can see how I anchored it there. And then the 100% anchor is at the absolute all-time high for this ticker. And then when I get rid of this pivot point, you can see that this thing was just hitting support right at 50%, bouncing up nicely, now getting rejected at 618. So you want that break above 618. This is weekly. Weekly is a really good way to look at it. So I appreciate you giving me the time frame on this. Looking good. Just looks like it's going to need to tippy tap before it gets through that line in the sand. And look at it trying to. So RSI is coming up. What you're going to want to see. Let's see if we can do this the right way. Yeah, let's box in. What we've got is a little double bottom here. You want to break through this neckline, which you're kind of doing, but you want it on a green candle. So if you get a solid daily session close, this is for a swing trade or a positional trade. If you get a solid close above this, was it 50? 60 something % line. If you get a solid candle close, that means 3:45 p.m. Detroit time. If you see that, that's a great entry, and a reversal is ensuing. I mean, this is classic reversal. Looking good on Neo. Nice stock. You can use Fibonacci's in a lot of different ways. Okay, so we've got a guest here today. He's a very special man. I'd like to bring him on now. Hey, Chris.
Hey, how we doing?
Doing wonderfully. How are you?
Good. I got a little bit of a kind of a throat, head congestion, cold, so we might have some technical difficulties on Get Technical today. Hopefully not. You as well.
Have you tried orange drink?
Don't happen to have any on me right now, but
I know
it's not a bad
idea. Well, I appreciate you being here while you're a little bit under the weather.
It's all good.
So we're looking. Gosh, Remy is so hard on us. So we're looking at a couple things from my perspective, which is I'm looking at patterns, Fibonacci levels, and a few moving averages. I'm also experimenting with pivot points, which is a new thing for me. But just wondering what stocks you're looking at. If you can give us the options data on those and why you're interested, and maybe look at the price action.
Okay, so let's share the screen, and then let me
All right. All right. And while you're doing that, guys, smash that like. If we get this video to 250 likes, Chris Capri will give you trade ideas. So
250. We brought some of my own posse for this, so they might force me into that situation.
All right, posse, time to activate.
Yeah, seriously. Okay, so you guys should see the charts right now. Yes.
Yep.
Sweet. Okay, first one I'm looking at is Microsoft. I am bullish on Microsoft. I'm bullish on tech this week. Microsoft on the weekly, as you can see, let me bust out the trusty pen here. So we kind of had this corrective structure, but with a building of higher lows, pointing at a breakout. Clear 230 and come back, and it just finds a stable bid at 230. Like this line in the sand held for, what is that, 5 weeks, 6 weeks? 6 weeks just touched and then launched. So we're now kind of creating this extension type phase in Microsoft. And so I'm bullish on it as a long-term price action structure. But when we look at the 4 hour or even 1 hour, we'll start with the 4 hour. You can see this most recent corrective structure at the top is also bullish, and we're kind of building a little bit of a pressure right here. So I feel like there's a couple plays on Microsoft. You could wait for this. If it holds here and continues to get weaker rejections, then you want to play the breakout. I think you could buy the 262 or 263 calls. If you want to reduce your cost, then you can do a bull call spread, which is you would buy an at the money or in the money call, and then you would sell a further out of the money call. The advantage of doing that versus the outright calls is that it reduces your costs because you're going to pay for this call that you're buying, and then you're going to collect a premium for the call that you're selling for further out of the money. So I think that would be option one. Option two is if you think that the market is going to pull back a little bit, like just 262 is too much right now and it needs to pull back and reload, then wait for the 257 price. And if you don't want to trade the options, you can just get long the underlying outright. I would totally be fine with that. We are already long Microsoft, the outlying, and we are also long on options as well. So 257 would be a potential play. In terms of options, this might be a great time to buy calls or again, buy a bull call spread, which would be a buy a call right around support. You could buy the 257, sell the 262. Sorry, alert's coming in. So you could sell the 262, be roughly a $5 wide spread on that one there, fixed costs, fixed profit on that. If you want to go for a little more gusto and you think, hey, Microsoft has more juice to break this time, then you could buy the 257 and maybe sell the 265 or the 270 a little further out. More profit, a little more cost to get in it. So those are my first plays on Microsoft. Any questions on that one before we roll on to the next?
No, looks like no questions.
Sweet. Okay. Facebook, bullish on Facebook. We've had this corrective structure for now, what is that? Since the 6th of April. And so that means short-term profit taking, sellers kind of coming in, dips are being bought, but then they were getting stopped out. And so everybody was just kind of waiting for a transition on this. And 297, we'll zoom out in a little bit and see why that's a line in the sand. But you notice how there was a transition here that it kind of just started to go sideways for a little bit. Then we had the Biden tax announcement and then immediate buying after that. So we break 297, but then we get immediate buying. And look how many candles. That's 1, 2, 3, 4, 5, 6, 7. 6 of the last 7 4-hour candles have been bullish. So after the Biden tax announcement comes out, this breaks through support, immediately buys, and it just gets bought systematically more and more after that. So for me, it's hard not to be bullish on Facebook right now. We already have a position on Facebook, but for those of you that don't, I think, again, you have a similar play. You can either buy the underlying if you want to get long the stock. In terms of options, I think right now a 305 to a 315 would be the play. Expecting that we're going to get a return. We break this and we're going to get a return back up to these highs at 316. So I kind of was hoping Facebook would have one more pullback to 297 because it is such a good buy at that point. It's such a good price, but it didn't. It was only there for a couple hours and it was only aftermarket and it was gone. So that tells me that the steady buying in the aftermarket plus the follow-up buying on Friday to close the week plus the strong buying to open right now Facebook is a buy. You have to be long on Facebook, and we have to expect kind of at least a move back up to the prior highs, which is 315, 316. So I like the 305 to 315. If you want to be a little more conservative, you can buy the 305 call and sell the 310 calls. And so that would be smaller debit to get into it, smaller profit target, but it'd still be, a favorable R to R on that one. So that is Facebook.
Can you revisit the time frames on those expirations?
Yeah. So for this one right here, I would probably shoot for the May expiry. So when I say May expiry, or I talk about April expiry, May expiry, I'm talking about the monthly expiry. And the monthly expiry is always the third Friday of every single month. So in this case, for May, it would be the 21st. So I would suggest buy the May expiry, buy the 305. You can either sell the 310 or sell the 315 for a May expiry on that one there. Yeah. Good question. And then going back to Microsoft. So for the Microsoft play on this one here, I would probably do the May expiry on this one as well. If I was to buy the 257, you might even be able to get away with a 1 or 2 week expiry on that. So that'd be a much more shorter term option, because it doesn't take long for this to round trip from 257 to 262. That's 1 to 2 weeks. So you could buy a shorter expiry. That would be one play on that. If you're going to take a bigger break for like 265, 270, 275, then I would push that till May or June expiry. So yeah, great question on that. Okay, SPYs. I'm bullish on SPYs right now. So SPYs are in what we call positive gamma territory. That means that in the options world, the market is more net long options on SPYs versus net short on options and SPYs. And so that creates what is called positive gamma. And positive gamma means when you have a positive gamma environment, volatility tends to be much more compressed. So you don't get huge outside moves. Qs is in negative gamma territory. It's much more vulnerable to volatility swings. But when we're in a positive gamma environment like we are with SPYs, that means less volatility. So if you're going to trade this, don't expect like gangster breakouts for this to go from like 418 to like 430 in a week. It's less likely of a scenario in these situations. What's more likely that we're going to happen right now, we might even get the breakout today, but I'm expecting this to break out because we have this corrective structure between 418 and 410. 410 gangster support hit 3 times, and every single time it just ripped higher and said, nah, you're not getting past here. Had a very stable, consistent bid at 410. So now we've hit the resistance, we went sideways, and now we're pressing. I feel like we'll probably break this maybe even during this session right now, during our combo right now.
Yeah.
So the play on SPYs, to me, I think you could do a 418 to 423, 425. Once you get to all-time highs, you got to start looking at round numbers, 420, 425, 430, 435. Those will be your targets, basically. Those are places that will attract liquidity. They'll also attract future option contracts. If somebody's going to sell at a strike and we're at all-time highs, the chances are they're going to pick a round number, 420, 425, 430. So that will pull the market to it. So I think
really quick, just for everyone, if in case you're wondering, Mark is on the 4-hour chart and has pretty consistently been using the 4-hour chart for these stocks that he's talking about. And I just want to remind everyone, smash the like button, subscribe, and click the little bell if you want more of these trade ideas that Chris. I don't know why I said Mark. I know I have a lot of respect for a man named Mark, and that's what you must fill that archetype, Chris.
I appreciate it.
So this is I talked to my therapist. I'll talk to my therapist about this Thursday. but guys, if you want the trade ideas to keep flowing, Chris is giving them away for free right now. Smash that like, hit the subscribe, and we'll keep them coming.
And if you're one of my own students watching this, that's like mandatory. You are required by law that you have to smash that like button. So
listen to the man.
If not, we're going to have trouble in our private forum later. So we might demote you. We might demote you. So, okay. So on the SPYs, I mean, if somebody wanted to trade SPYs underlying, totally fine. I feel like being long, anywhere between, if you want to wait for an intraday dip, between 416.71 and 417.50, but I feel like we're going to get the break. So I like the 418, 423, a $5 wide. You could go to 425 strike. But yeah, it's hard not to take that. And for this one, I think you could go a shorter expiry. I don't think you need to go May expiry for that. I think you can do 2 weeks out, so look for 2 weeks out, look for expiries that a little bit shorter. They'll have, if they can move fast, then that's favorable. Anytime you're net long options, you technically have theta decay. That means every day that option is open, the option value of that contract winds down or loses value. It's very much like car insurance. If I spent $3,000 on a year for car insurance and I got in no accidents and we're at the 11th month, well, I have one last month to use anything in that insurance contract. And so every single day that closes, that contract becomes less and less valuable because I have less time to exercise it. Same thing with options. So when you get long options, you want the market to hit your target fast. Because we're in a low volatility environment, positive gamma environment, I would suggest at least 2 weeks out. I think 1 week, you'll see too much theta decay. Your option will just decrease in value very fast. Give it a little bit of breathing room to get to that second target, $5 out, $7 out if you want to. Any questions on that before we move on?
Everyone is just complimenting you.
Okay, that's fair enough. It's probably my own students, so they don't want to get demoted.
Yeah, no, there's a couple people here I know too. You're getting nothing but love right now. I'd say keep going. Keep going while you're getting it.
So IWM, we have a neutral play on this one right here. We have an iron butterfly at 220, 234, 220, 208. It is drifting a little bit. And so I feel like if it can continue to drift, I don't feel like IWM has enough gusto to break out of it. We had a student, Jay Lazenby, I got to credit him. We've been talking about for a while that small caps will underperform or will overperform in the beginning of a bear recession or a bear market. As we get out of it, small caps are outperformers. But once you start getting 1 year, 2 years out, they start to underperform. And he posted this great diagram that kind of showed the outperformance, that they were doing great on the 6 month, on the 3 month, but on the 1 month, small caps are negative. They're slightly down. They're down about 5 or 6%. So when you think about that, there is this shift of flows happening in the market. And I think the shift of flows is going to continue to slowly push out of small caps a little bit and start hitting the mid caps and the large caps. This is the Russell ETF IWM. It's stuck going nowhere since 1st of February. But we look at, say, IWR, which is the mid. If TradingView loads it for me.
TradingView is acting up.
Okay, that's awesome. There we go. Take a second. This is pushing all-time highs. Very much like SPYs, very much like, Qs is almost pushing all-time highs. This is pushing all-time highs. So there is a rotation out of small caps into mid and large caps. And so with that being said, I think that rotation is going to continue. And I think you're going to continue to see underperformance in small caps. So with that being said, if you don't want to do a neutral strategy, then you could wait for this to drift up towards the resistance. And you could either buy a put outright, or you can do what is called a bear put spread. A bear put spread would be to buy an at the money put. So we get close to resistance right around here. And we buy the 231, the 232. And then we'd want to sell a put further out of the money. You can look at monthly VWAP if you wanted to, which is right around 223. You can look for 220s. You could even go for a little bit more if you wanted to, which is right around 216, 215. So if this drifts up slowly, that tells me there's no imbalance in the market. There's no real will to push this aggressively into resistance. They're showing weakness into resistance, and the sellers are going to see that and be like, yeah, get back down. You don't have enough gusto to get past here. We're going to sell you. So there's going to be people who sell outright if we get up here in a very timid way. The bulls are going to take profit if they're smart, because they'll realize they're heading into a major resistance. That creates a nice bearish play with options. So you can either get long puts directly around 231, 232, or you could do a bear put spread, buy an at the money around 231, 232, and sell it further out of the money, where that would be right around weekly view up 223. You can go 220. If you want to go for a really big one, 216. In terms of time to expiration on this one, because the volatility is being sapped out of IWM, you have to think, okay, this might not get down that fast. So I would give this a May expiry or a June expiry. Give it 1 and 2 month out roughly. And so that would be the play on that. Any
Beautiful.
questions before we wrap up?
Oh no. Okay, good. Yeah. So
I got one more.
It's got to be a quick one. But guys, here's what I have to say. Chris is not going to give it to you unless you smash the like button. Unless you smash the like, subscribe, hit the bell, do out all the things that YouTube wants you to do, and then Chris will give it to you. Furthermore, I will say, not only will you get a trade idea, I'll sweeten the pot a little bit. You'll get Chris back on the show next Monday. He said he's busy, he doesn't want to do it, but I might be able to talk him into it if you smash that like button.
You got to show me the cheddar.
Yeah. No money, no honey. All right, so let's go ahead, Chris, and keep going with that last one.
This will be a quick one here. So Lowe's, bullish on Lowe's. Lowe's is very much like an HD play. In the US, you look at pre-COVID, 17% of the average American's budget went to transportation, car payment, insurance, gas. I know a lot of people that have plenty of money and they're being like, yeah, I'm not driving as much. We got rid of our second car or our third car. And so you're going to see people kind of purposing that money into the home. If they're working from home, that they have to set up an office. Yeah, the last year that's already happened, but this trend still has more legs to go in it. And so who's benefiting from that? Anything that has to do with home building, restoration hardware, Home Depot, and Lowe's. Lowe's is like the cheaper version of the Home Depot.
List them off, my man. XHB. I've been knowing home builders. I'm so glad you're here talking about it.
Yeah, it's hard not to be bullish on. And you get home builders do well on both sides. You got the people are going to spend more money on their home, and then on top of it, there's this exodus out of cities. People are moving to more suburbs, more to the nature and things like that. So the home building is just going to be, there for a while, So with that being said, I think we're going to get a little bit of a pullback in Lowe's, and I'm totally happy with that. I want Lowe's to pull back. I want it to pull back to 180. I'm not sure we're going to get there. And so I may start looking at, if we start getting close to 190, maybe look for a 190 call or 190, 200 to 205. Bull call spread. So that would be the two options on this one here. This is the weekly chart. This is not quite as fast a mover. So I would give this 1 to 2 months expiration. The most cherry situation is we get a corrective pullback into support. It transitions saying, hey, we've absorbed the selling pressure. That's why we're moving it sideways. Get long. That's a great time. This 180 is an absolutely prime location there. If that doesn't happen and you start to see it around 190 being a major strike, kind of start to stabilize a little bit, show some strength, then you can look to get long the 190s and target 205 or 210 prior highs. I'm thinking once this pullback ends, this thing is going to want to recover those all-time highs. And I think we're probably going to eclipse that this year. HD, most likely going to eclipse its all-time highs. Lowe's, if you had to say, hey, where would you like to put $100,000? That Lowe's is going to break the all-time highs this year or by the end of summer? Or would you say, it's not going to? I'd say, yeah, without a doubt, it's going to break that. So I'm bullish on Lowe's. That's my final and fifth play of the day.
There you have it. I derive extreme satisfaction from that final pick. Thank you very much, Chris, for being with us. And I think we might be getting enough likes to have you back on next week. Chris, where can folks continue their journey of learning and self-improvement in their trading with you? So
you can check out our website, secondskiesforex.com. We've been around for 14 years. We have a ton of free material there. Now all our content is going up on YouTube. So Second Skies Trading. And for those of you new to options, as I mentioned before, we got an intro to options series coming out. So next week we should have part 1 out. It will help lay a foundation for a lot of these terms. Then we'll have part 2 out later in May. So these 2 videos, if some of these terminology has been confusing, don't worry. Options is just naturally more complex. It's like chess and normal trading is checkers. There's a little more complexity to it, but once you get through it, you start to realize there's way more monies to make. There's way more ways to make money in options. You can make money if the market goes nowhere. You can make money, obviously, if it goes up or down, but you can make money via time and you can make money via volatility. You can't do that with stocks in and of themselves, but just by time passing, you can make money. And just by the market becoming more volatile or less volatile, you can make money on that. So it just opens up different ways to make money. Once you start to realize that, it changes the way you think about trading.
I'm interested. Thank you very much, Chris, for being with us today, and happy trading.
Good seeing you. Be well.
Thanks. Great picks there. Cool guy with the home builders, right? Chris is one of those guys that we've had on the show that has changed the way that I think and speak about charts. So seriously check out more of his stuff. Second Sky Forex, and we will be having him on again. Just please, guys, do us a huge favor: hit the like, hit the subscribe button. See a little thing on the bottom of the screen? Just do it. Don't be weird. But man, home builders. Let's go ahead and take a look. Let's drive this point home. Let's do the dead horse thing. And just I had SPY open while he was talking about it. SPY on the 4 hour. We have not broken above that 418 and a quarter level. But we are, we're trying to. We'll see if we get some more action. I would say around 2:30, 3 p.m. Detroit time. That's Eastern. So yeah, I've been bullish on lows. That was a big one for me. LOW. So it is looking like it's in a really good position for a buy. Loving it. And then so that's low. Let's look at HD Home Depot. I don't think he pulled the chart up for that, but good gravy. Holy cannoli. So the yellow line that you see here is the 8 exponential moving average, 8-day exponential moving average. Look at this thing, just hugging that thing all the way up. So I would say with Home Depot, very easily, if we get a break back above that, and we're looking like we're nestled nicely back above the 8-day moving exponential moving average, we're back in choo-choo train territory. If you know what I'm saying. Absolutely fantastic. And then XHB, the home builders ETF. So once again, guys, it's great to have a top-down approach to finding your picks. So find the sectors that have the most strength, and then find the stocks within those sectors that are standing out, that are carrying those sectors. So XHB is one way to look at the home builder sector. This is the home builders ETF. We are on a 4 hour. Let me switch back to a daily. And it looks like we're really trying to hold support right here. But this could just be a nice, it is, frankly. This is just a nice little corrective phase for some extreme growth that we've had. The 8-day exponential is really nice on this one for getting these nice little buy signal. I don't know if I'm even drawing that well. But the point is, this thing is doing what we love, which is loftily touching some type of moving average and then bouncing. Absolutely beautiful. Let's pull up the Bollinger Band on this one. Oh, God, it's even better. That's the 20-day moving average. What you could easily be doing if you want to just be trading in and out of this is doing, let's delete all the drawings. Go long, go short. Go long, go short. When it touches that upper band on your Bollinger Band, you're going short. When it touches or begins to kind of form a touch here on the 20-day moving average, the median or the mean rather, go long. But I'm just holding this thing, and then trades in between when I have time. All right, have fun at the gym, Larry. Good that you're getting exercise. Everyone gets some exercise today. So we are at about 2 minutes remaining. So I want to thank you all for tuning in today. Little bit of a warning. For those of you watching us live right now, we're going to experiment. Don't freak out. We're going to experiment with some new scheduling. So we might be moving the time for Get Technical maybe to the afternoon. So like around lunchtime, so that we can, ideally would love to get someone that's actually live trading in here in the morning at the open. I think that's more beneficial all around. So guys, I want to thank you very much for tuning in. Big thanks to our guest Chris. Sorry about the camera difficulties. We'll get them sorted out before next time. Next up, we have our Benzinga Pro Showcase. So make sure you stick around for Ryan and Jonathan Mallard. But at any rate, as always, I'm Neil Hamilton, producer AB. This is Get Technical, and happy trading.
3, 2, 1.
Welcome into the open, where